Hey guys, this is Melanson Mortgages, and this video is going to be 5 ways to improve your credit score. So first off, why does credit matter? It tells the lender about your credit history and history of repayment of loans. To them, credit represents a giant part of your financial health. Credit also matters because it significantly impacts your borrowing power. The higher your number is, between 300 to 900 credit score equals low risk. The lower the number is, it equals a higher risk. So the first way to improve would be to know your credit history. If you know your credit history, you can be more self-aware and know what you need to work on. So number 2 is pay bills on time. This one is super straightforward. When you miss a payment, it might show the lender that you don't have the ability to uphold the responsibility it takes to actually have a loan. So number 3 is the utilization rate. A lot of people actually don't know that this has anything to do with your credit score. Basically, your utilization rate is just the amount you've used out of your total credit allowance. So if you have a $10,000 limit across a couple of cards or one card or whatever it is, and you've used 3,000, that would be a 30% utilization rate. The general rule of thumb is to try and stay below 30% utilization rate. So number 4 is to generally just increase the credit limit or the amount of accounts. Never ever try and increase your limit right before you're about to get a mortgage. Especially if you're in between the commitment period and closing. Also, if you don't actually believe that you have the discipline to have a higher credit limit without utilizing it and not paying it off, it would probably be in your best interest to just stay where you're at or gradually increase it as you grow your discipline. Kind of relating back to my last point about the utilization rate, of course, if you're increasing your limit, as long as you keep using the loan the same way, technically your utilization rate would actually be lower if you have a higher limit. So this is a great way to do that. So number 5 is your credit history. Unfortunately, when a lot of people are younger, they don't actually get educated about credit and also don't get the opportunity to get a credit card or anything like that early on in life. With that being said, any credit that you do have, it's best if you can keep it open if possible. Obviously, if you're paying really large monthly fees or something and you're not really using it, then that might be a different scenario. We can look into that. But if it's a free credit card that you've just had for a long time, don't really use a whole lot, at least it shows the bank that you do have a credit history and that you have repayment history that dates back. If you don't have any history at all of credit, you might have to go with a secured credit card, and that's it. So there is a lot more specific ways that I can get into. If you want to reach out to me and you feel like you need some credit counseling, of course, I'm not a financial advisor, but I do know a lot about how this stuff works. And so I can do my best to help you out there. To check your credit, a lot of the banks have on their apps or online banking either a TransUnion or Equifax credit score checker. For example, Scotiabank actually has a TransUnion credit score checker. Or you can use Borrowwell, which uses Equifax, or Credit Karma, which uses TransUnion. Once you've pulled your credit report, it's really important to look for any errors. If there are any errors, make sure that you dispute them. It's not fair to you if there's something on there that shows you're delinquent or you haven't been paying your credit card if you've actually been doing a really great job. I've left a general guide at the bottom. I think TransUnion is actually a little bit more strict. So anyways, guys, if you have any further questions about credit, please feel free to let me know. I'd be happy to help you out. That's what I'm here for. And once again, this is Melanson Mortgages, and thank you for watching.